I already did the spreadsheet, but I'll bring it over and show it to everyone. Alright. Good afternoon, everyone. Today is the 11th day of April 2013. It's Thursday. We have a partners meeting tonight. If you are on the free trial, you want to get into the partners meeting, you need to become a partner before the partners meeting. If you don't know how to become a partner, send us a quick email at support@cfrn.net with the text partner info in the title. Okay, and we'll get you the information you need to become a partner. We have, let's see, today. Let's go through the results. We are plus 18 ticks on gold, plus 3 ticks on crude, plus 2 ticks on the Russell. So we are up a total of $230 a contract today. It took us 6 trades to get there. Okay. We achieved our 2 points today. In 11 minutes, it took us 1 trade, and we were at $110 a contract. Now, let's bring up the spreadsheet, and we'll go through that really quickly. Alright, so far in the month of April, we are now 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days into April. We are up $2,625 per contract in the live trading room. If you assume an $8 round turn commission on each one of those, we are up $1,793 per contract in 9 days, did I say? 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, 9 days. Alright, that's not bad. That's not bad. That's about, I don't know, what is that, 250? It's about the equivalent of 5 ES points a day. It's a good start to the month. Hopefully we'll be able to continue in that. And there's no reason why we wouldn't be able to. Well, to at least continue making profits on a regular basis. If you have not taken a free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. In the free trial, you get 5 days in our live trading room, and you get access to everything you see here. You get access to all the indicators, all the charts. You get to watch me put trades on, watch me put trades off, watch me try to clunk together a whole bunch of things so we can show winners of the iPads. All that sort of stuff I was doing this morning. Sorry about that, everybody that was in the room this morning. And that's it. I am limited in time today, so well, I don't mean to make anybody feel bad by that. I'm just going to go through everything really quickly. All right. On crude, we only had 1 trade on crude this morning. Not to say that there weren't more trades. I mean, look at this right here. This is beautiful, all the way down right here, and there were trades in here. You could have gotten short there. You could have gotten short here. Actually, that hit the BB. Nope, you would have had to get the down close below the trend line would have been right there. A little bit of divergence, down close right there. Right now it's starting to diverge a little bit right here. Hey, what's going on with that thing? For everybody who's a partner or who's on the free trial, you should have your tick-by-tick update on the slingshot set to off. Okay? I just noticed on this particular one, mine was set to on. Set it to off. Over here it's starting to, well, it's not starting to diverge yet, but if we had an up close on the current bar, we would start to get some divergence. There's a trend line. You need to close down below that trend line. There's also a long opportunity right in here, and a long opportunity right here that would have stopped you out. Okay. Let's see. I'm scrolling backward here. This is the trade that we took. This is the one trade that we took. We had a bearish cross, a test of the BBC with a down close, red on the cycle, and bearish divergence. If we look at the pictures, it would be this picture. All right. This is crude oil from January, I think. But step 1 is the cross. Step 2 is the space. Step 3 is to test the BBC, give a down close. Step 4 is to have divergence with a red cycle on the slingshot. Okay, we had all those things here. I got short. I took some profit. It did give more profit than I took, but I was happy just taking a little bit. That's it. I'm going to move on to gold right now. This huge move down right here, that is nice huge trends like that. That's where I mean, there's just a ton of money to be made in those. Okay? And we capture a lot of them, typically, when we get those big trends. Show you again how I changed that. How I changed what? Oh, the slingshot. You right-click, go to Properties. Down here, it says tick-by-tick update. Just set that to off. Okay? That's what you meant. Right, John? Alright. Now, the Russell. We had 2 trades on the Russell today, and we took Break even on one and a couple ticks profit on the other. Now, there were a lot more trades. I know we had a bunch of guys making a lot of money in the Russell this morning. I personally did not make a lot of money in the Russell, but there was plenty of opportunity. Let's see, right in here would have been a long trade. I pointed that out in the live trading room. I didn't take it, but there would have been a long trade right in there. There would have been another one up here. If you grab that, is that the one that I grabbed? And I said, I'm going to be really aggressive. No, it was over here. Another one just like it, where there was no divergence. Yeah, there wasn't much divergence on this one either. What you like to see, hang on a second, John. What you like to see is a lot of divergence, because ideally what's going to happen is the green line, when you have this kind of divergence like this, the green line is going to work its way up into the cycle every time. And price action is what's going to make that happen. Okay? See, the green line is going to work its way down into the cycle when you have that kind of divergence. So that's what you want to see. I took this trade over here this morning, and we only had a little tiny bit of divergence, and I said I'm going to be really, really quick with my risk. At the close of this bar, I only had probably 2 ticks profit, maybe 3 ticks profit on it, and I moved my stop to break even. It took me out of break even. If you did not move your stop to break even at that point, you would have stopped out with an 8 tick stop, and then you would have had to get in on the next one, which was right here, or right here, or no, this one wasn't so pretty. I highlighted it, but it wasn't as attractive. You would have moved your stop to break even again with 4 ticks profit in the trade. If you got the proper entry, you would have moved your stop to break even again. What lines do I look at for divergences? That's a fair question. I look down here on the slingshot. Okay, it's all down here on the slingshot. You look for the green line to be moving away from the cycle portion. That's all. Right, the green line moving away from the cycle. Is bearish divergence over here. It's bullish divergence over here. And right over here, it is bearish divergence. Okay, that's what you look for. That was it. That was all we had on the Russell today. Now, gold is where we had the most trades. One thing that everybody should be taking away from this is that I'm using the same exact trade setup. I'm using the same exact time frame. It's a 4-tick range. Every bar is the same height. I'm using the same risk. I'm using the same indicators. Everything is the same from market to market to market to market to market to market. Now in here on gold this morning, the open was right over here. There was an opportunity to short gold right on the open right in here. I missed that. Then we had to wait, and we got a long trade over here. This was our first trade of the morning. We got in there, and we took profit up here. Okay, we took 11 ticks profit on that. There was another opportunity in here that I missed because I was talking about something else, but there was another one right here. I know some of the partners got the second one right here. The up close above that trend line right there for another 10 ticks or whatever. I know a bunch of guys were done on the day right there at 10 minutes, 10, 11 minutes. They were done for the day. Made their money and wrapped it up. Over here we had, let's see. There was a long trade right in here that I didn't highlight. Right there. That would have stopped you out had you taken that trade. Nothing in here. We didn't have any divergences. It got kind of messy in here. And I was pointing out in here how it was going back and forth across the BBC. There was an opportunity to short right in here and another one right in here. Now in this spot right here, one of the partners had noticed that we had higher highs and higher lows. And so I drew some trend lines in and I identified the head and shoulder pattern that was setting up in the neckline that seemed to be a good target area for another short over here. Okay. We entered in on that one over here. We got short there. We took some profit down here. We shorted again over here, but I made a mistake on that trade, so I got out of it at break even. Okay. It was a valid trade, but I got out at break even because I would have ended up getting out at break even. Let's see. And over here there was another one that pulled back up, tested the BBC, gave a down close. There was an opportunity to short right here. Again, that went 5 ticks. I took it. I put my stop to break even as soon as I could. I put my stop to break even when I get either 4 ticks profit in the trade or it closes on the other side of the MA1, whichever happens first. And I may at times get into a trade where there's no divergence, like this one right here. I didn't actually get into this one, but where there's no divergence, very limited divergence. And in that case, I'll say, and I said this on one of those other trades I took this morning on the Russell, I'm going to be very quick with my risk. What that means is I'm not necessarily going to wait for 4 ticks or a close on the other side of the MA1. Okay, and that's what I did. Anyway, that is where we were. Okay, those were the trades that we took this morning. That's how we got our profit this morning. But I'll still look at some of these other markets with you because I know some of you guys are curious about the NQ and all that. It's 12:36. I have a little bit of time left. Did we highlight anything on the NQ this morning? Doesn't look like it. All right, I'll skip the NQ. Let's go to soybeans. Soybeans started moving early today. Well, I say early. You know, this week the soybeans started opening up at 9:30 Eastern. So there was more activity this morning right around that time. Right in here, this up close had bullish divergence and an up close above the trend line. That was an opportunity to get long on the soybeans. There was another spot over here that I had highlighted in the live trading room. It was another spot to get long. Over here, everything changed directions. Right in here, we didn't have any divergence down on the bottom, so there was no opportunity there, but there was right in here. Okay, you could have shorted there, and you could have shorted right here, and actually even here. Now, this one down here would have been one of those ones that doesn't have much divergence, I would have said, had I been looking at it. I'm going to be very quick with my risk. All right, then everything changed directions. Oh, wait, let me show you this. This one right here would have stopped you out. You would have been minus 8 ticks on that. Okay, win, 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 stop out. Or actually, I should say win, 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 stop out. And over here, right here would have been another win, and that would have been it on the soybeans for the morning. Okay, could I speak a little more about? Sure, Gary, I would be happy to. I'll do it in the partners meeting tonight too. Sorry, I don't mean to rub it in. I get out when price has when price has done what I expect it to do. All right, I expect every trade to go at least 4 ticks, and like right now, for instance, let's just look at gold. Gold is setting up a trade right here. Here's our trend line going down the tops. Here's our bullish divergence. What time is it? 12:39. I got just a couple of minutes. I'm going to keep looking at my chat box so Bert can tell me when everybody's in. This is bullish divergence over here. Okay. This is bullish divergence down here. This is just a down sloping trend line. And up close on this is a spot to get long on the gold. It's got a low right now of 566.7. I know it's a 4-tick range, so it's going to have a high of 567.1. So what I can do is I can right now put a buy stop on or just enter long right there at 567.2. If you get long at 567.2, then at this point, I would look for it to go at least 4 ticks in favor. All right, I would look for it to go at least 4 ticks in favor of the trade. From 567.1, I would look for it to get up to 567.5, and then I would put my stop at break even, or that would put my stop at break even. But if I had entered it, let's say 567.2, I would look for it to get up to 567.6, which would have 4 ticks profit in the trade and a close on the other side of the MA1. All right. So I would move my stop to break even at that point too. Okay? That is how I would do it. That's how I would move my stop up to break even. Now, once I'm in the trade and the thing is moving around, that's a little different. You know, it's exiting the trade is a little different of a process. I don't exit at a target normally. You know, when people put brackets on, it's 12:40. When people put brackets on, I don't typically put on a bracket with a target on it. I put on a bracket with just a stop, and then you know, I leave the target part open. Like here is crude oil from the morning. Okay, you see I have 8-tick stop and no target. The target is grayed out. If I were to check this, then I would have a 16-tick target and an 8-tick stop. If I were to check that, same thing. But I don't do that because I would rather exit on price action. I'd rather exit, when the market says it's time to exit, when prices stop moving in favor of the trade. By doing it that way, you get into the explosive trades that sometimes go 30 or 40 ticks in a couple of seconds. You get into those without only getting 8 ticks out of 30 or 40, and that happens, believe it or not. That happens probably a couple times a week, that those things, you get into those trades. And you also have the opportunity to take 10 or 12 ticks when it has it. Okay, there you have it. When I say break even, I mean break even. If it moves up some more once I'm at break even, I may move my stop up some more and trail it up and just keep following it up. Okay, I always have the sell stop checked. That's right, John. Always have the sell stop checked. All right. All right, guys. If that's it, I am going to wrap it up here. Let me just point out on the ES, there was a trade here, and a trade here. Both of these were going into the weekly trading zone, so they weren't so good. But this one right here was a beautiful trade with a nice opportunity for a long. Everything flipped around, and now there's a short trade that happened right here for about a point. But it's going right into the zone, so you wouldn't be taking that either. All right, so the only valid trade this morning on the ES was right in here. I don't believe, I do have the yen up. We had a nice opportunity on the yen this morning, right over here. Dropped down quite a bit. There was another one right here that tanked pretty well, and I stopped watching the yen. But just wanted to point those out. All right, that's it. I'm going to wrap up the recording right here. If you are on the free trial and you want to be a partner and get into the partners meeting tonight, you need to take care of the paperwork that was sent to you in an email. If you don't have that, send us a quick email at support@cfrn.net, and we'll get it out to you as soon as possible. Okay? If you haven't taken the free trial, go to cfrn.net/apply. Sign up for it.